So my first question is, what is Ijarah, Muntahiah, Tamleek, and what is finance lease?
Assalamualaikum. So you want to know what is finance lease and Al-Ijarah Muntahiah Tamleek, right?
Now we'll be looking at the definition of finance lease. According to MFRS 117, finance lease is a lease that transfers substantially all the risks and rewards incidental to ownership of an asset. The title, however, may or may not eventually be transferred. According to accountingexplained.com, finance lease is also known as capital lease, where the risks and rewards inherent in the lease assets are transferred to the lessee under lease arrangement. The risks and rewards are deemed to be transferred when any of the following conditions are satisfied. Number 1. The ownership of the leased asset is transferred to the lessee at the end of the lease term. Secondly, the lease contains a bargain purchase option. Thirdly, the PV of MLP is substantially equal of the fair value of the leased asset. And lastly, the lease term is the major part of the useful life of the leased asset. Next, we'll be looking at the definition of Al-Ijarah Muntahiah bil Tamleek. According to Al-Barakah Banking Group, it is a lease whereby the bank will buy and lease out the equipment required by the customer for an agreed rental fee. However, Al-Ijarah Muntahiah bil Tamleek is different from Ijarah in such arrangement where it provides an option for the customer to acquire the ownership at the end of the specified period. Now, according to Kuwait Finance House, Al-Ijarah Muntahiah bil Tamleek is defined as a leasing contract for completed property ending with ownership by way of number 1 by gift or number 2 by sale.
Yes, Miss Suraiya, how can we help you?
So how do we treat the transactions, meaning the accounting treatment for the finance lease?
Okay, finance lease is explained under MFRS 117, and according to the standard, the lease machine is treated as if it had been sold to the lessee under a long-term financing method. This is because the underlying principle of the agreement is that substance over form, where the lease machine is treated based on the economic reality and not on the legal reality of the lease machine. Because the lessee is the one who bears the risk and benefit the reward of the lease machine. Okay, now I'll explain to you how would you record the transaction of the finance lease in your book if you were the lessee. So, if you were to adopt finance lease, you will have to capitalize the machine as your fixed asset upon the inception of the lease agreement. That is, you have to debit your fixed asset and credit your lease liability. And the amount to be recognized is at the lower of fair value of the asset at the inception date or the present value of minimum lease payment at the inception date. And any direct cost to be incurred in securing the lease shall be added to the cost of the machine. Next, when you pay the lessor for the monthly rental, you will have to record it periodically, which means whenever you pay, you record, you debit lease liability and credit back. Next, you will also have to account for finance charge of the rental. That is, you have to debit your income statement as interest expense and credit your lease liability. And the amount to be recorded is at the apportioned amount. Interest charged on the finance lease will be spread over the lease term. There are two methods in allocating the finance charge. That is, the actual method, and the sum of features. Okay, as for the depreciation, the lease machine will have to be depreciated over its economic useful life or lease term, whichever is lower. For example, if the machine useful life is 8 years and the lease term is 5 years, you will have to depreciate the machine over 5 years. If you as the lessee is certain to buy the lease machine at the end of the lease term, you will depreciate it as the full economic useful life. Using that same example, you will depreciate the lease machine over 8 years. Next, if the finance lease is renewed, the depreciation will be based on the lower of extended lease term or the economic useful life. Next, if you were the lessor in the finance lease agreement, the present value of the minimum lease payment made by the lessor include the periodic payments by the lessee and any guaranteed residual values. So the initial direct costs incurred by the lessor, such as legal fees, internal costs, and other costs, are incremental and should be directly added to the PV of MLP. So the journal entries will be at the inception date of the lease is debit lease receivable and credit bank, and the amount to be recorded is at present value of minimum lease payment. Upon receiving the payments for rental, you will have to debit bank and credit lease receivable. And to record for the interest of the lease agreement, you will have to debit lease receivable and credit your income statement.
And how is the accounting treatment for Ijarah Muntahiah bi Tamleek?
Yes, Ms. Suraiya. Well, generally, AUV is a complement to MFRS as accordance to the article written by Subita Banu Muhammad Hussein and Malia Sulaiman with the title Between International Financial Reporting Standards (IFRS) and Financial Accounting Standard (FAS). According to this article, IFRS covers all types of transactions and activities, whereas FAS are issued on particular Islamic finance transactions that are not fully supported by IFRS, which shows that actually AOF is a complement to IFRS. The economic effect of IMBT financing that you wish to know about is that you'll end up owning the machine. Under this type of financing, you will be given 3 options, that is to either purchase the machine at the end of the lease term, renewal of Ijarah for another term, or returning the asset to the lessor if you decided not to buy the machine. According to IFRS 117, IMBT transactions are actually regarded as finance lease and are to be accounted as receivables from the lessee book, and it will be regarded as debt in the book of lessor. However, Sharia councils view IMBT differently, whereby the assumptions of substance over form does not exist, as you, as the lessee, will only benefit from the machine and will not bear any risk, meaning that you will not entitled to any maintenance cost or depreciation of the machine itself. Okay, now I'll show you how would you record this transaction as per required in AOP FAS 8. For your accounting treatment as a lessee, you will just have to disclose in your income statement as a rental expense, which as for the journal entries, you will have to debit profit and loss as rental expenses and credit cash if you pay cash. Or next, I'll be explaining to you the accounting treatment in the book of lessor. Lessor will recognize the machine upon acquisition and the machine will be recorded at historical cost. Any impairment loss as well as the depreciation will be borne by lessor. The revenue gain from Ijarah financing will be allocated proportionally to the financial periods in the lease term. Besides that, if you undertaken any repairs with the consent of lessor, well, actually the expense will be recorded as expense in the lessor's book, not your book. To make it clearer for you, I will show you the journal entries for Ijarah in the lessor book.
Next, in the lessor book, when you purchase the equipment, you have to debit equipment and credit cash. When you lease the Ijarah asset under IMBT, you have to debit investment in Ijarah asset and credit equipment.
Okay, next, for the expenses incurred by lessor, First, you have to debit Ijarah expenses and credit cash. For the depreciation expenses, you have to debit depreciation expenses and credit accumulated depreciation. Next, for the Ijarah rental received for the year, you have to debit cash and credit P&L. For the disposal or sale of Ijarah asset, you have to debit cash, credit investment in Ijarah asset, and credit P&L. Next, if there is any immaterial direct cost, you have to debit expense and credit cash. In the case of material direct cost, you have to debit deferred cost, credit cash, debit P&L, and credit deferred cost. Okay, now I'll show you the extract from Pro Forma and Maybank Islamic Berhad.
Okay, I hope you have a better understanding on finance lease and Ijarah Muntahiah now.
Good morning to the directors. As we discussed previously about leases for the purchases of our tractors, and basically the two leases that I had to compare was Ijarah Muntahiah Tamleek and finance lease. So Ijarah Muntahiah Tamleek is very much like an operating lease, whilst a finance lease is considered as a loan to purchase an asset. So Ijarah Muntahiah Tamleek is where the company reports this lease as an expense, where the rental every month is put in the SOPI, which is comprehensive income, and not the SOFP. Whilst in finance, it will be considered as an asset where we have to depreciate the asset and also put in the interest expense in the income statement. Therefore, since I said that in the income statement, rental will be recorded, whilst for finance lease, only there will be two things recorded, and also it will affect the asset. Therefore,